My name's Richard Betts. I'm the co-founder at Real Asset Media. We run this stand, and that's also an example of what we like to do, which is we do cover the news, but actually our main focus is on investment strategy, research, data. What are the things that are driving the market? And we deliberately consider ourselves as somebody who writes with and for the market, not about the market, because we also collaborate, and this is part of that collaboration. And what we're aiming to do is increase the investment and increase the knowledge about several sectors in terms of Europe. So delighted to be looking at the investment topic here for logistics. We've got a great panel, so let's start with introductions. Joel, let's start with you. So 30 seconds on who you are and what you do.
Okay. Joël Gorsele, CEO of Intervest. We are a real estate logistics investor, currently mainly active in the Benelux, managing 1.5 million square meters. We're currently expanding into France, Germany, Italy, and we have taken Intervest private a year ago together with TPG, and so now we can focus fully on pure play logistics.
Great. And what Joel has done very perfectly is also demonstrate where to hold your microphone so that everybody can hear it very well. Great. Laurie, over to you.
Thank you. So Laurie Lagarde, I'm working for CBRE Investment Management, real asset investment management platform globally located. When we're talking about EMEA, we have 45 billion of assets under management, of which 12.5 billion for logistics, which represent 8.5 million square meter. And I'm the head of the operation of that platform.
Great. Balazs.
Hello, everyone. Mic check. My name is Balazs Lados, Managing Director at Realterm. We're a global investment manager focusing on transportation, logistics, real estate. In Europe, we have about 1 billion under management. We're in 7 countries. We have a team of about 45 people, and happy to be here.
Great. Ingo.
Yes, many thanks, Richard. Very happy to be here today. And yes, thank you very much, Stefan. Stefan is the former CEO for Swiss Life Asset Managers. I'm representing the big box business of Swiss Life Asset Managers. Swiss Life Asset Managers is the top #1 real estate investor in Europe, one of the top 10 investors worldwide. And we are building at the moment the platform for big box logistics European-wide. And we are very happy to be in today's discussion. Many thanks for the invite today. Thank you.
Let's just start briefly with, I suppose, what we're seeing as a change in the market, I guess, since EXPO last year. What are we seeing? Laurie, let's start with you. So in terms of changes from where we were 24 months ago, where are we now? Are you feeling more positive? What's the situation?
Right. Over last year, there's a lot of that has happened on the market. I think we were very optimistic when we were at MIPIM, trying to think that 2025 would be a wonderful year. And then suddenly a lot of things happen coming from the US, plus geopolitical intervention. I think we are still better than a year ago, but we had our bump down across the year. I think the sentiment is getting more positive. We're going to speak about demand later on. It's tag demand, but still in the sector, I believe that long-term demand is going to be sustainable myself. We see equity back to do investment in logistics. So I think it's much more positive, but we had a real bump as well in the middle of the year.
Okay, great. And I can see more people coming. So to save me spending the whole of the session telling people, if you could just tell anybody that there are headphones available and that's what they're for, that would do me a massive favor. Thank you. Good. Balazs, what about you? Key differences between 2024 and 2025?
I mean, compared to last year, it's all rainbow, sunshine, and unicorns, Richard. Yeah, I mean, jokes aside, the debt capital markets has come back at scale. I mean, the euro-denominated rates you're getting on all-in rates for our type of product has compressed massively, and that has induced additional transactional activity. The bid-ask spreads have come down, so I think it's a better market. And if you look around, that's many more of us this year. I think we're on a positive uphill trajectory going forward.
Okay, good. Ingo, and then I'll pick up with you, Joel, and then we'll do some more quick fire ones. So, Ingo, your take.
I think during 2024, capital markets has improved. Refinancing, yield compression we have seen. And now the occupiers are back. We have really good discussion with occupiers. The big ones are back, looking for land banks, looking for joint venture partners, looking for developers and investors. And that is great. First of all, capital markets, now the occupier market is back. And so the future is very bright in logistics.
Okay, good. Joel, as bright as that, tell me.
Okay, great. No, and I agree with Ingo that I reiterate that the market occupiers are back. And I believe here at EXPO, I believe when talking to people, people are more confident. That market has had stabilized. Interest rates have plateaued. Some yields have been repositioned. Financial terms are improving again. And so the feeling we have when talking to people is that more will come to the market. That feels that people are confident in the current environment to bring assets to the market. And that's probably where we came from. We came from uncertainty last year to being prudently positive this year. And you can see that really in the traction on deals and the liquidity in some of the markets where deals are really brought on.
Okay, good. Let's pick up a little bit in terms of the demand side. You already mentioned that, Laurie. I suppose, what are you seeing in terms of demand? Are you seeing still increases in terms of e-commerce, different types of occupiers coming, new entrants into the market, whether that's battery storage or a lot of, for unfortunate reasons, but nonetheless, a lot of focus on the money that's being spent on defence and whether defence is then an element of critical infrastructure and thus logistics. So I suppose, what are you seeing as some of the demand drivers?
So the demand has been staggering over 2025, depending on the country that you're talking about. There are still deals, still leasing deals, but it takes a bit more time. And occupiers are taking a bit more time to take some of the decisions of really creating or not. And we see much more renewals than move. Type of occupiers, I mean, and you know, goods to be stored. Defense, we heard a lot about it, but I haven't seen anything. And I've had a pretty good catch up with some of my peers like 2 weeks ago, and that's the same on the other side. We don't see really what is really happening on defense. We see more an improved demand in pharmaceutical and food industry in some of the areas, especially in the UK, for example. But yeah, I think I think there's still deals going on. It takes a bit more time. There's a bit more vacancy than we had like a year ago, for example, but it's still manageable. And again, it depends from one country to the other and from one supermarket to the other.
Okay, good. Anyone else has views on those? Interesting, you picked up the point about vacancy and whether or not that's going to actually be used up in terms of new entrants coming in. Anyone else has a take?
Yes, absolutely. I think vacancy rates. I think in Europe we are facing vacancy rates in between 4 up to 6%. That's in comparison to US markets where we are at 8-10%. And in great markets like in Stuttgart, like in the Paris region, like in the Netherlands, Benelux, the vacancy rate are again heading to 0%. If you have a great location, if you have the building permit, if there's the zoning and if the general contractor agreed, you can build speculative. And within the development timeline, you can stabilize the asset. And still we see rental growth in some specific areas. I think you are very familiar, Joël, in the Benelux markets. You see all the route from Rotterdam to the Ruhrgebiet, the global hubs. You don't get any land banks, and if you have a land bank and you build speculative, you can absolutely exceed your underwriting, more or less, again, 10 to 20% in rental growth. So it's absolutely exciting. You need always the raw material, and the raw material is the land bank. That is my view.
So land are critical.
Yeah, and I can pick up on that. We indeed see that in the market. Rent reversion of 20% are We see that in those at those locations which are core, where then the vacancy is still below 3-4%. Additionally, we had, I think, all the backlog on behind of the U.S. tariff conversations, which I believe is not signed yet, but companies are preparing and are able to update their business plans of how to come to market. We also see U.S. 3PL operators, clients coming to Europe. We see regionalization, but also decentralized supply chain. They don't want to put all their eggs in one basket, but we do see that it apparently attracts more traction to Europe, and that companies are ready to take decisions. And I think in the month of September we already have more lease proposals out than in the first quarter of 25. So it's picking up, but again we're cautious. I think we're all cautious, but we can see it's really picking up.
And do you think that's I'll come to you in a second, Balazs. Do you think that's a direct result of the tariffs, that's already you're seeing an influence?
Yeah, it was rather difficult for clients to fully draw up the business case. If it is a 15 or a 30 or a 50% tariff, and I believe almost all clients, whether they ship to, because in Europe we're still large exporters to the US, also the pharmaceutical business, or is it then business coming from China that is classically directly going to US, now making a stop in Europe where things can be put together, and then at a lower tariff rate can be shipped to Europe. So supply chains are getting, there's a huge pressure to get shorter supply chain, more resilient supply chain, and that might, and it's maybe a strange thing to say, but that might provide an opportunity for us as a sector, because in essence supply chain was very efficient, and if somebody breaks that down and brings inefficiency, that for people who are warehousing like us, a certain inefficiency for the market is not bad for warehousing.
Okay, good. Balazs, yeah.
I would just like to come back to the point of new types of demand. And at Realterm, we cover a different part of the supply chain as my peers here. We're not focusing on warehousing. It's more the high throughput transfer hubs within supply chain. So anything that connects your origination point to the big box, or anything that connects your big box to the end consumer. So typically cross docks, IOS, it's also called as industrial outdoor storage facilities, port-related hubs, air cargo, etc. And so in our universe, all the volatility that we mentioned here in the panel created a big need for flexibility and agility for the users. So they started to diversify the entry and exit points into Europe. So the Mediterranean seaports are getting a bigger share of the volumes, which perhaps hurts a little bit Hamburg and Antwerp and Rotterdam, but they need to diversify to have an agile supply chain. We also see a lot of Chinese 3PLs coming in. The requirements are typically very immediate, so they would need anything that is available within 3 months, and we see that in the UK, Netherlands, and Germany specifically. And then also the net zero carbon journey and electrification of fleets creates a new asset class. In the final mile segment, it's the combustion engine to electric transfer hubs. That's completely new, and it's really hard to figure out, and who makes the investment into the charging, etc. You need a tremendous amount of power, and that's something that is on the mind of all of the occupiers that we service. So pretty interesting kind of source of new demand.
Okay, good. An interesting point. We had a session on logistic trends yesterday morning with Brad Grease from LaSalle, who's their head of Americas, and he was essentially saying, because I asked the question about, if Trump struggles in the midterms, will that mean that the tariffs come back? His answer was, no, definitely not. Those are going to stay because that's a serious policy position that they are taking. That's not going to change whatever happens during the term of the president anyway. So just, I suppose, picking up on what we're seeing, are we seeing there's a lot of discussion about nearshoring, more setting up in Europe, particularly Eastern Europe as well. Is that something that we're seeing within your portfolios? Are you seeing more of that happening?
Well, we've seen nearshoring happening slowly, but those occupiers that have started their nearshoring to Europe were thinking about it just after COVID. So we are just 5 years after COVID already. So some of them have retrieved some lines of production to Germany, for example. We have some clients in Germany that have done so, line by line, just to control, some of the spare parts that they need. What we see actually in 2025, and that may be linked to what you were mentioning, Joël, more Chinese occupier coming to Europe. They really want to attack the European market, and we see a lot of them who wants to be, having their own facility being served from Europe and covering the entire market. So for me, the big trend right now is really Chinese. And the nearshoring activities of those others, it's continuing, but it's not like it's one line after one line, depending on the countries and all that. It could be Eastern country, but not only.
Okay, good. Yeah.
Yeah, we wrote a white paper about this, so if anyone is interested, just ping me and I can send it to you. Eastern Europe is obvious, but we actually see an increase in the Mediterranean. So, Portugal, Spain, Egypt, Morocco, all these countries are just chiming in, and you see quite a bit of production being set up there, not necessarily transferring, but new kit. It's built in those regions for tax efficiency and supply chain closeness reasons to Europe.
Okay, good. And what do we see? Feel free to pick that up, Ingo, but I'd be interested as well to see what we're seeing in terms of capital flows, because are we seeing North American capital coming into the market? Are we seeing Asian capital coming back? What's the sense of where we are for the flow of capital coming into Europe?
Absolutely. I think Europe is at the moment absolutely a sweet spot for any investors at the moment. We see a lot of US capital investors coming to Europe more on the development part, and we see income partners from Asia coming to Europe. That is, and it's absolutely depending what kind of product you are offering to these kind of investors. If you have a business about 15 up to 20% IRRs on development, for example, it's very attractive for US investors coming in. If you have some value adds or Core Plus, that is more for Asian investors coming in. And this, I think, the strong factors coming into the European markets. You need a professional platform like you are providing, for example, because in comparison to the US market, the European market is very fragmented. You need a professional team as GPG, and you are looking for developers in Europe who have the traction with the municipalities, with the mayors and everything else, that land banks can be secured. And that is quite an attractive product. We are very optimistic about that. Again, coming to where the demand is coming from, absolutely, Laurie, there are a lot of Asian e-commerce companies coming to Europe at the moment. But we have one sector who's coming as well. And I think, Kevin, you made a great report piece. I've never read a better one, I think. For defense. Defense is the new manufacturing in Europe. And that has a great impact on take-up numbers as well.
Okay, good. And Kev, we can come to you in a second actually about the defence thing, because in fact, let's do that just for a minute. Can you give a minute's worth of your defence report and what that might mean in terms of numbers? Yeah, yeah.
Sorry to gate crash. I'm Kevin Moffid, Head of Industrial Logistics Research at Savills. As Ingo says, we did a paper on the defence sector. We released it 5 weeks ago. In that paper, we claimed that we think there will be 37 million square metres of additional demand from the defence sector over the next decade. That's a big number. Actually, it was pretty simple analysis. We took job forecast numbers, related that to a density, whether it was manufacturing R&D or logistics, and then applied that forward on a country-by-country level. We have to caveat, we do not know at this stage how that demand will land. Will it be the expansion of existing facilities? Will it be owner occupation? Will it be traditional leases on logistics parks? There are a lot of known unknowns at this stage. But if we simply look at the correlation between defence spending, job growth, and space demand, that's where we get our numbers from. So thank you for the shout out.
Great, thanks very much, Kevin. So that's interesting in terms of a demand driver. I've also heard people talking about battery storage, those kinds of elements. So actually some new kind of demand coming through. But you mentioned a little bit, both of you mentioned take up, but surely at the moment there's quite a limited supply because there's been a limited amount of development happening over the past couple of years beyond COVID. So does that mean, yes, there may be some issues short term, but actually in the medium and longer term, actually the fact that there's been limited development means we're going to have a supply situation?
I think so. No? I think the supply for modern logistics warehouse, like we understood that, no? Institutional investor warehouse, no? The supply has absolutely sunk to maybe 20% what it was before, and demand is now picking up. And you need a minimum of 24 months before a warehouse can be completed and can provide to the customer base. That means again rental growth. No? In specific markets, and that is what we are looking at. We have, as Swiss Life Asset Managers, we have 1 million square meters of land banks only in Germany. We are now getting to the Netherlands, we are getting to France, and we have pressed everything. We have the permit, we have purchased the site, we have the general contractor agreed, so we can start immediately when the demand is picking up. Or we have trust in our capacity and we can build immediately. And that is absolutely exciting for our business. And I think I'm very happy, you know. One of the biggest occupier is again in the audience, no? Tudor from Amazon. I think you're very optimistic about the market as well. And we are very happy to provide with absolutely sustainable warehouse.
We should have just had a large round table, I think, is what we should have done. Good. Laurie, it'd be interesting to pick up from you. I suppose supply side, is that an issue coming up, do you think? Or does it mean for you that actually there's better prospects for rental growth? How do you see that dynamic in the market?
Well, I mean, to Ingo's point, development takes a long time to be done and to be delivered. I believe that with the vacancy rates currently going a bit high, sustain demand, but still a long time for occupiers to decide for some of them. It's got to fill up the vacancy first. Less supply will mean indeed in 2 years' time, maybe, and with an increased demand at that time, a need for more buildings. So I think we're going to potentially have that situation that is going to be a bit more complicated for the market. But at the same time, there's very few developers, given the current demand, that are building spec. Some investors are backing up some of those speculative development, but less and less, because we need to foresee a bit more the demand picking up. And if you take that discussion like early 2025, we were expecting a bit more higher take-up at the end of the year, still kind of shy. So I think we are all waiting for the demand to pick up. So it doesn't mean that it's not working, but it's not sufficient to fill up the vacancy and then supply and fill up the future supply. But I believe in 3-5 years, we may have an issue on the supply, yeah.
Okay, good. Balazs, yeah.
We see a proliferation of demand. So, you know, good schemes, good buildings in strong locations, they go very quickly. And we see rent growth. Secondary buildings, older ones that are not up to standard in secondary tertiary locations, those will be left behind. So we will see the vacancy increase for those locations for older stock. So actually we see a lot of opportunities in repurposing old buildings, renewing them, bringing up to modern standards and releasing them still at a spread or at lower rents than a new build will cost. That's a large part of an investable universe, and that's why you had zillions of value-added money raised in the last 3 years. It's a big focus for a lot of private equity groups.
Okay, good. Joel, it'd be interesting to pick that up with you. Feel free to pick up any of those points as well, but I'd be interested to know what we're seeing in terms of the demand for space. Is it for big box? Is it for urban? Is it for last mile? Whatever your definition of last mile may be. So what are you seeing there? Is it for higher spaces? Is it for, what are people looking for? And then Tudor can decide whether that's correct or not. Joel.
So I believe no surprises there. So urban logistics is becoming more and more important. But for us, at least for us and in the whole sector, the big take-up numbers are being made by the big box logistics. And then those being the driver of the whole market. Focusing on that, the logistic clients are more and more focused on effective logistics, efficient logistics. Location is not a new element that was always on the priority list, but they are more and more cost constrained because they're also making more and more capital intensive investments like yourselves. And we see those clients being very selective on when they will move forward and then they go full force onward with that. Clustering is still there. We see clients being focusing on having campuses and being able to create efficiencies on site as well, working for several clients at the same time. Being able to shuffle with labor force, so that's where we believe that the demand. We see more and more supermarkets coming to the market. They have been there cautiously already for 5 or 10 years. I think COVID gave them a kick, and that is definitely coming to market. Some of them really reshuffle, some sale and is back of their stores. They're now recycling that money into automation of supermarket warehousing, and we see that now coming to surface with our clients, and they're taking decisions, and I believe the right ones and good ones for the sector.
And we're seeing a lift generally actually in terms of investor sentiment towards retail. Is that also positive then for retail warehousing?
Yeah, I believe, as you know, we have a pretty strong portfolio in retail as well. And we've just bought a big retail scheme in Spain recently. So we're convinced about the right retail asset in the right location. And I'm pretty happy to see that we are back on the investment on that kind of profile. So I think we need both, right? It's a question of both retail, physical retail, and e-commerce consumption. So I think it's good to see retail back.
Okay, great. I want to pick up a little bit on, I guess, locations, what we're seeing, because everybody's investing kind of across Europe in different markets. So it'd be interesting to guess your sense of where the kind of hotspots are, if those have changed as well, whether there's a change because of supply chains or how things are moving. So where do we see some of the hotspots at the moment in terms of Europe if we're looking? And I've also just been doing a session on Romania as well, and I promised to ask what your views were on the Romanian market. So anyway, so if you have a view on that, if it's investable, not investable, what your view is, feel free to share that. And they may wish to convince you just over there later, depending on it. Anyway, let's pick up. Let's start with you, Balazs.
Yeah, so our single highest priority for this year is to grab market share at Germany in scale. We hired a a German team based out of Frankfurt. We have a number of opportunities under exclusivity that will close towards the end of the year. I mean, we've been priced out of Germany for years since we launched Realterm in Europe, and now the pricing is more attractive than Spain. So it's a natural kind of expansion of our platform to come here. Germany is the biggest market, largest transport market, tremendous number of users, lots of entry and exit points from an export and import perspective, heaps of production that kind of services the first mile, so completely makes sense. Netherlands, also high conviction market for us. It's our home base. It's where our headquarters is located. Highest deal count to date in our funds. UK, we're very bullish on, but it's gotten competitive over there, so it's a bit harder to get product. And then Southern Europe as well. I mean, they're doing great. Their GDP data looks phenomenal. Spain is very strong. Italy is high conviction too, but high ratio of private ownership over there, so it's really hard to unlock product.
Yes, absolutely. I absolutely agree with you. No? I think as very big institutional investors, we are asked by internal committee, why are you convinced that you are making a good investment in that submarket? And we have a factor model. I think, Kevin, you would like to see it as well, as a top research guy here in the European jurisdiction. As a factor model means where is the barrier to enter submarkets the highest? Where is the place where boxification is not wanted? For example, the Netherlands, no? Belgium. In Germany, there's always difficulties to place a logistics box. No? But that makes it interesting because the business plan is quite stable. If you have agreed on land banking, you have a general contractor and everything else, no, you can make it. No? And if permitting is very difficult, because the municipality has 2, 3, 4 years time, I developed a facility for one of the biggest e-commerce companies worldwide. 2 years during COVID, the municipality guys who were responsible for the building permit was not answering the phone because the municipality don't give them mobiles. No? And that is the difficulty you have to face as a developer investor here in Europe. No? And that makes it absolutely interesting. No? And these are the markets where we are in. We are in Netherlands, we are in Germany, we are in Bavaria. You know where Munich is standing for, no? For sure not for logistics warehouses, no? But we are here. We have in the Alp region, we have a big warehouse, no? Nobody has in the Alp region a big warehouse. We have. We are looking in Barcelona because Barcelona you have in the back you have the mountains, in the front you have the sea, and you have only a corridor to Valencia. You don't get any sites. No? That makes sense to us, and so on and so on. That is where we are looking, how we are looking at European attractive submarkets.
Okay, good. Laurie, what's your view on the locations?
Well, we are invested in certain countries in Europe today. Romania is not part of it, to answer your question. And I don't expect it's going to change in the coming year or so. You know, it all depends on, there's two elements right now. Indeed, the economic cycle and the GDP and where the demand is going on. Southern Europe is Spain is very moving right now. There's indeed in Belgium, and I'm sure you're gonna add up on that. The Belgian market is doing very well. Same on the Dutch market as well. Germany, in terms of investment, it's a bit more complicated than it was. Indeed, we know. But generally speaking, I mean, we are looking at any opportunity anywhere to see whether we can match it. Then it depends on our the equity source that we're using. Some are over-allocated to a country and not another, but then there is a potential buyer interested in that country and not the other. So all depends on where the equity is aligning. But generally speaking, we're looking at those locations where we are because we want to go further by scaling up. We have teams on the ground, specialists on the ground on logistics. They know what they're doing, and we want to scale up the business.
Okay, good. Joel?
We mainly focus on Belgium, Netherlands, indeed, because of rent reversion potential. We did 20%. We're still doing that, and high entry barrier for all. Also, there's a scarcity of developments, which in the Netherlands has been over the past years has had a large volume of developments that has now much slowed down because of higher costs, the power issues in the Netherlands. I believe in Belgium we are the only one who is currently constructing a speculative development in the whole country of Belgium, 40,000 square meters.
Laurie says no. Yeah.
Whereas you have one? Okay, there's another one. Good. I like it. So, from a real estate investment platform, we are happy with those markets that are transparent for our investors, which have a stable government. I was just about to talk about France, Germany. Those countries have left us behind a bit. But in essence, we do expect all, even though there is from time to time no government or no prime minister, there is also that volatility remains rather low. And there are some countries who deliver opportunities. And you probably don't need to be in every of those countries because they do indeed demand more work. Talking Italy, but whether you pick Italy or Romania, but you do need to have a local team on the ground. You do need to partner up with people who have local expertise and have already options on land and know how the things work. You don't need to be in all of those countries, I believe.
Okay, so actually partnership in some of these locations is a key element. And is that across the board? Are you all looking for partnerships as to develop through into other countries, essentially?
Yes, we do. We have partnerships with several developers, whether these are local developers or much more known developers. In every single country, again, I mean, we have asset management and transaction teams located in the countries, and they're really working on the local level to develop for our core plus fund strategy that we have pan-European dedicated to logistics. And it's important to have the right partner to develop such assets, and then because they know where to find the land, they know, to your point, to access to municipalities so that's how we work together.
Okay, good.
Yeah, for us, it's the users, the tenants in the buildings. We have a large global roster of transportation companies that would like to expand into new geographies. So we service them all around the globe. So going side by side with them to an airport authority or a port authority is a much stronger message than us little managers, Realterm, going up to them. You need to have XPO or WFS with you, and then the story is different. We follow where there's a requirement for users and tenants that would occupy the buildings further down the line, and that's been a very successful method to expand.
Okay, good. Does anyone have a question? If they do, raise your hand, stand up, do whatever is necessary to get my attention, and I will ask that. And I only say that because the session is almost at an end, and the time to ask those questions are in the session, or indeed if it's one that you want to ask privately, immediately afterwards would be the time. It looks as though there's no questions. So I'm going to come to my last one, which is for the investors in the room here, and indeed here watching it online. What do you think is currently the best opportunity for return within logistics? So that could be a country, it could be a city, it could be... Where would you be investing right now? Where do you think the market is at the moment where you should be looking? Let's start at that end.
Yes, that's a very important question. We are very disciplined where we would like to invest our money and our capacity. That means from Hamburg down to Munich, from Munich to Stuttgart to the global hub Ruhrgebiet, and then to Rotterdam. That are the land banks you don't even get one, and if you get one, you can make exceptional returns. Also, it's quite easy to agree on 15 up to 20% IRR. No? Most of the time, I think, Stefan, you can agree. Our returns were always in between 30% IRRs heading to 50% profit on cost on this basis. No? So it's absolutely amazing if you can make that story true. No? That is absolutely important, that you have a very capable team, no? A platform who can bring this forward. No? On bigger portfolios, if you get maybe, at the moment the sweet spot is in between 30 up to 50 million euros per asset. Bigger portfolios are coming around now. If you have the power to buy that for a good price, it's the beginning of a cycle, and you can do some rental growth and reversion in as well. That is an opportunity as well from my perspective. So development plus bigger portfolios, if they have the gunpowder to do so, that are the best opportunities in the market for the time being.
Okay, great. Balazs.
I would vote for industrial outdoor storage in the vicinity of major infrastructure hubs. And this is land that is leased to transportation users that will remain to be leased to transportation users. So not a redevelopment or a brownfield play. It's land leased to transport companies that will remain in that use.
Okay, great. Laurie.
It's very difficult to pick a country. It's not even a country, it's about a location, a submarket. And because we want to grow big, I would tend to think big portfolio across the markets where we are. In the right location, it's very difficult to tick all the boxes, but we would look at growing fast, rapidly. And there's a number of things, a number of portfolios on the market right now. There will be more. I think we have to move now. The opportunities are now.
Okay, great. Joel.
I would pick the opportunity to have partnerships with developers. I believe developers didn't need investors in the past. But for investors nowadays, there is an opportunity to team up with developers because you need each other. You can build on developing pipeline together. And I agree with Laurie to indeed do it now and go fast. And whether we can do that portfolio-wide. I think there is in terms of pricing, an opportunity now on portfolios, which might at some point turn around again. So,
great. So, lots of interesting opportunities there. But the key element, I think, Laurie, was from you, which is it's now is where the opportunity is. Thanks very much to everybody for coming. Thank you for joining us online as well. Thank you to all of the speakers. Really interesting points.